Hey folks, welcome to Market Technical Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype we keep talking about, which gets all of us into trouble should we listen to it. Today, Monday, March 17th, 2007. Well, today was a wild day, and we did an urgent update video, and we usually don't do those weekend videos over the weekend, but we felt that last night was big enough news to warrant a video last night be put out so everyone could be fully appraised of a situation, and that's what we try to do here. You know, we try not to BS, we try and talk about what the technicals are and the setups and how that choreographs into the market possibly moving, and off of that, it's important that we all play the market and keep a tight stop loss, obviously, and abide by all the normal rules of trading. So you take the technicals into account and the psychology of the markets and avoid all this Wall Street hype, you really get a much better and much clearer view of where the market will go. And today was a great example. So again, we put out that video yesterday because of the Bear Stearns buyout by JP Morgan for $2 a share. And many of you guys today would probably say, well, why did Bear Stearns trade up? And let's go to Bear Stearns while we have a little time here. BSC. And Bear Stearns here, now it's tough to see intraday, but it actually closed at $4.81. So a lot of people say, well, why did it close up above $2 if it was bought out for $2? Well, the idea here is, folks, is that everyone's speculating that someone else was going to come in and make an offer better than that. And so that's why there's a premium built into that, assuming someone comes out and offers $4 or $5 for it. You know, who knows, it maybe goes for $2, but that's why the premium is built in at this stage of the game. All right, so going back to the ES now, and today was a great day for trading because technicals worked beautifully. I can't tell you how much the technicals played into this market and how much we saw in the markets when perfect technical lines played in. So let me get out my trend tool so we can get right into this. Now, we all know what happened last night. The Bear Stearns news freaked out everyone. Asia tumbled. Asia was mostly down all across Asia. You had down 3% on the indexes, if not 4%. And we saw the futures last night down 300 points on the Dow, down 45 on the NASDAQ. The S&P futures down 30-plus points. So it looked like it was going to be an ugly day. I mean, it looked like blood was going to be in the streets, and we were all talking last night in the Sunday night chat, those of you that were there, well, could this be capitulation? Because from our point of view, a great thing about the flush out is that it's a possible buying opportunity for a bounce. And, you know, the general range, and we love the Sunday night chat because we gauge everyone's psychology level. We gauge their bearishness or bullishness, and believe it or not, it's an indicator for us to, and we talk about that in the chat, and we say, hey, listen, there's a lot of bears out there, there's a lot of bulls. We look at the put-call ratio. By the way, folks, that put-call ratio today was almost never under 1.5, and you guys know that have traded with me or in the chat room, in the E-mini chat room, or in the day trading stock chat room, which is one chat room, and traded alongside me or talked to us at InTheMoneyStocks.com, we pay close attention to that put-call. When it gets above 1.5, that means there's two-thirds of all the puts and calls out there are puts, and that's way too many for the market to handle, and you usually get a push to one direction. Obviously, if it's 1.5, you get rallies in the market. So we saw today the market actually gap down and then rally very, very strong. And look at this powerful rally we saw. Notice where it went to, the 200 moving average on the intraday ES, and that's why I talked about technicals working to a T, because we were able to talk about this all day in the chat room and you know, talk about shorts here, and then again we saw a fall. And you might say, well, why did we see this fall here? And this is a great thing. Intraday, I remember talking in the chat room saying, guys, there's something a little strange about this at this point in the day. You know, we didn't see a flush out this morning, so we didn't see that capitulation. So this powerful move may actually come back in. And not only that, but, you know, there's just a bunch of indicators. You know, you don't really see that panic after this initial rally here that was indicating that we would continue to rally. So not only do you expect a consolidation off of a powerful move like this, but you can even expect a pretty hard sell. And that's what we got. Then you got a small bounce back to that, what was the intraday 50 moving average, and now a drop. And now this is where we got very excited because we started to see a possible W pattern. And Nick in the chat room actually mentioned this right away. And he said, listen, watch for this. We expect the market to rally with a put call that high. We expect this, we expect that, based on this data we're seeing, okay? And you guys know that once you have Bear Stearns coming out here being bought out for $2, this is a worst-case scenario. So the fact that the market wasn't collapsing means that something's going on out there. The expectations for negativity are very, very low. Not only that, but you have the Fed tomorrow. You have Goldman Sachs reporting. You have Lehman reporting tomorrow. And expectations for these earnings, by the way, for Goldman Sachs and Lehman are relatively low. So it's going to be interesting to watch how the market takes this data and reacts to it. Not only that, but we have PPI tomorrow, I believe, and we have the housing data coming out tomorrow at 8:30. Then there's a quiet period. Basically, from 8:30 on, there's nothing until the Fed at 2:15 p.m. Eastern Time tomorrow. Now, that's when the real excitement's going to come in, because what does the Fed do here? Does the Fed cut one full interest rate point? Does the Fed do 0.75? Where do we go from there, and how does the market react to it? And it's going to be fun. But needless to say, focusing back on today, we saw the W pattern forming, all right, and a beautiful lower low. Whenever you see a W pattern with a tail down here, and then they push it up and you get that tail, once you clear that high, it's usually a buying opportunity, and we called this out in the chat room. As soon as we got above this, and on the SPY, I think it was, I can't remember exactly what it was. I'll look at the SPY shortly and show you guys. But we called out this as a long, and look at the take off. Not only that, but off a W pattern, you expect a V pattern. Once it got up here, we mentioned that it was probably a good area to go on the short side. You have a pullback right into a necktie here. All right, look at the 20 crossing the 50. Necktie beautifully pulled back for a V formation and blast off. Now, this time we stalled out right here for a second, but we actually pushed through the 200 before coming in hard right before the close, which what I was thinking was probably some profit taking. I know if I had been long going into the close right up here, I'd be taking profits as well, because you have Goldman Sachs, as we mentioned, tomorrow. And just on the off chance something crazy happens again overnight, you really might as well take profits in the market. It's a bear market still, and you need to take those profits. But needless to say, you had a pullback here, and then the futures have ticked up slowly after that. So it was a great day technically to make calls, and you can see it in the chart here, how the patterns were just forming beautifully. I mean, you don't get better patterns like this. And as I mentioned, the beauty of it in this market is that everyone was very bearish going into today because of Bear Stearns. And the Fed had actually cut the discount rate last night, too. It was kind of overshadowed by the Bear Stearns news, but the Fed had actually cut the discount rate. Tomorrow they're looking to probably cut the Fed funds rate 0.75 to a full percentage point, which is going to, I mean, it's amazing in itself. Now, my speculation is we need to watch for not only a rate cut tomorrow, but do they do something else? I would prefer to see a smaller rate cut. I would prefer to see not a full point, although I think the market would probably like it. But my preference here, and I think the psychology of the United States or the market out there, would rather see a smaller interest rate cut, but then some bailouts on the side, them buying up mortgages, buying up the subprime defaults, all this junk. If we could see the Fed act on two avenues instead of just interest rates, not only would it help the dollar stabilize here and cause oil to come down, which, by the way, fell hard today. Oil was down huge, like $4 today to 106. But it would give the market confidence that the Fed is going to do other things besides just meddle with these interest rates. Because let's be honest, we're not far from zero if we get a full point tomorrow. I mean, it's getting down there to the point where things are, you can only lower it so much more before you have a zero interest rate. And the Fed will have to move on other fronts. And if the market can see that, then I think we rally. So there's a bunch of interesting factors out there today, but the fact that the market did not get crushed today shows some relative strength out there. Not only that, but as the Bear Stearns news comes out, as Lehman got crushed today, by the way, Lehman got crushed, but it bounced back nice in the afternoon. You have expectations just getting lower and lower and lower, and the lower the expectations, the easier to beat. And that's all you have to know for psychology. For the psychological nature of a market, you want expectations as low as possible. If a company was expecting 50 cents, but over the last few months has basically said negative, then all of a sudden the market expects no profit, so a profit of zero, and then they come out with a profit of 5 cents, even though it was well off the high from what they expected. It's still a beat, and they're still going to rally, and that's what you're seeing here. So should we see these expectations continue to drop, then really these companies don't have to perform that well as long as they perform decently and beat the expectations, or the Fed beats expectations, or government beats expectations by doing some new stimulus package, or who knows. It's a positive for the market. So, on Friday's video, even though we got hammered Friday, I still said we slightly favor the upside here. And many people say, well, why? How? And the basics of it is it comes down to, yeah, we could be wrong. But the technicals indicate from the action, especially even today, that there's a slight bid in the market. Look at the rally. Look, we gapped down here. Here's right around 9:30. And where did the market end today? Boom. So we gapped down here in the market. I'll show you the SPY so we can get into that. But here's the market gap down. You had that move up, then the move down, creating that beautiful W pattern right there. The move up, the V pattern, and the blast up there to the highs before that little late day sell. So you open the SPY here, and then we closed the SPY all the way up here. Okay, so very nicely done today. And yes, it was down, but one thing I want to point out here as well on the SPY daily, and this I found very interesting. The low here from January on the SPY was $126. What was the low today? $126.07. So they never took out the January low on the SPY. Now, the Nasdaq's taken it out. I mean, that's not even a question. The Nasdaq's taken it out. It was 22.02. Now we're closed the day at 21.77. So, we're more focusing on the SPY to watch for this level down here, the exact low being taken out, whether or not it will be. But needless to say, it looked like it was going to be close today, and we almost broke it. We almost broke the 126.07 level. Instead, we moved up. Anyways, long story short, be careful tomorrow. We got the Fed coming out. We got Goldman Sachs earnings. That's going to be huge. We got housing data. Come join this chat room. It's the E-minis. We do the E-minis in the chat room. We do trade the SPY. We trade stocks and also do the swing trade alerts. Come join us. Email us if you have any questions, and talk to you tomorrow. Take care, guys.